Good morning, traders. We write Wednesday or Thursday? Are we Thursday already? Thursday, 22nd of August, 2024. Welcome to the Flow Show. Ryan is out for the next couple of days, so I'll be your host here, Cayman. So first of all, reminding you that we still have our coaching program going. You can have some discounts on there. Let me just show you what kind of discounts you can have. You can have like 40% off your first hourly session. Then you can get additional discounts when you book multiple sessions with us, with myself or one of our team who are extremely ready to help you all improve your trading, your psychological approach to markets, etc., etc. Whatever questions you have, whatever difficulties you may find, we can probably help you out. Even on the technical side, we have a couple of really technical specialists in our midst as well. So if you want to know all about harmonics or Elliott waves, there are people there as well who are ready to help you with more specific things. And we also have our trader funding program running for all people who take accounts, I think above, if I'm not mistaken, above the smaller one, or is it perhaps even all of them now? You can have a free introductory session with our good friend Blake Morrow as well. Lots of people are taking it. People are very happy because they get a lot of support by doing it. You also get access to our training room for the time of your assessment, at least. And then if you take bigger accounts, that this access will actually be also extended, and you will have access to one of the most active chat rooms in the business. We are all there to help each other. So give it a try. Don't wait for it. Let me just copy those links into our chat room if you want to join us, if you want to join the coaching program. There you go. Hopla. And now, without further delay, let's see what happened over the past, let's say, 12 to 24 hours. First of all, China is thinking about retaliating against those EV tariffs that the European Union is putting onto them, and they are looking into the dairy imports that they have from the EU. That would mean that they are looking at putting tariffs on some 2 billion euros equivalent of exports to China, but that's a pretty small retaliation piece, if you ask me, because or the Europeans at least, they import as much as 13 or 14 billion dollars equivalent of EV stuff into Europe every year. So, but no, China is thinking about those. They're also a bit panicking, it seems, over the long-term bonds over there, because the PBOC found it necessary to comment on the long-term bond market, spurring traders not to go all bananas in there. On the other side as well, they are putting in place programs to support the real estate market once more. So it's really all hands on deck. It seems to try and save the local economy. The market is not really buying it. Yes, we still see dollar China a bit lower in sympathy with all the rest of the dollars, but China is still not getting too much support from the investors, because it is holding around PBOC fixings, which today finally they put a bit lower, around 712 and a quarter, if I'm not mistaken. Let me quickly, yeah, 712.28 today's fixing. And in the meantime, they still injected about 360 billion yuan through the 7-day reverse repo It isn't changed from last week, but they're still injecting money over there. All right. In other news and other comments, actually not too much comment. We've heard that China and Russia are still making deals, planning on supporting tech and supporting green, even green constructions, etc. So they are still playing on the one hand with the Russians over there. Talking about that, I mean, the geopolitical side is still not really getting any better. There's still Russia, Ukraine going on, as we know. And today we have to pay a bit of attention to what's going to happen in the Middle East again, because we know that the Iranians announced some drone attack today, um, which should be not too far from now, because they said that it would happen on the 22nd in the afternoon over there. So that must be about now or in the upcoming hours. So watch out for what's happening on the geopolitical side again of things. Next, we are looking at some data which came out in the middle of the of all the other stuff. So the German tax revenue fell about 8% in July. That's another one that is not really going too well in Germany. And just give me a sec. Okay, I think we are going to talk straight away about that laughable payrolls benchmark revision that we saw from the BLS. So there was a report coming out 10 a.m. New York time, but then this actual report came out more than half an hour later, and that was what the market was waiting really for. The first one actually, right at the time of publication, sparked a fierce jump in especially the dollar yen, because the market was reading a report where the jobs market created 1.3% more jobs, and everybody was trying to make calculations, and we saw all kinds of numbers from virtually flat to -1 million. And then it took about half an hour before the actual report came out, and as we can see here, they printed finally within the ballpark of some of the bank's expectations, between -600,000 and -1 million. We came out bang in the middle. So the dollar got a bit of a knock on the head again on the back of it after those little spikes, and people trying to find out what really went on. But there's again been some shenanigans going on around it, and really apparently at least 3 banks called up BLS in between that first report and then during the half an hour delay, and actually got communicated the actual number even before it was publicly published. And I guess talk about insider trading is perhaps a bit much, but again, those official instances and especially the BLS, it seems that they still have problems with confidentiality, and they just perhaps in a moment of panic just spit out the number to a few selected banks. So I guess we are going to get yet another investigation in what's going on, and how many people actually can't shut up before an official publication. Yeah, great work if you can get it. I think I saw Mizuho and BNP Paribas somewhere were named in the amongst the banks that got the numbers. Yeah, you got Mizuho, Nomura, and BNP Paribas, apparently. At least those 3 got the numbers, which is really, really, really laughable, right? When we know that those reports should be for public eyes only once they are published. But anyway, dollar got a bit of a knock on the head, of course, on the back of it, and people already speculating about what Powell may have to say tomorrow in Jackson Hole. I'll come back to that a little bit later. What else did we have? We had not too much. We did saw a big drop there just before in the mortgage applications as well. I think there's a bit of pain in the mortgage market. So none of what we are seeing right here and now is really supportive for the dollar or um, could continue to weigh unless we get much better PMIs this afternoon. But I guess those PMIs will be taken as a good excuse to perhaps sell dollars on any blip higher. But yeah, now the market is waiting for what Powell may have to say tomorrow. Does he have to rewrite a mildly dovish speech into a very dovish speech, or is he going to shrug it off, not brush it under the table, but saying that they were expecting this because this report is bringing us much closer to what the household reports were saying, right? You remember that like nearly every month, the market was saying like, well, you got the BLS report, and then you got the household report showing a much less bright picture than the BLS reports were showing, and now they have to revise it much closer to what the household reports were showing us, right? So there may be a bit of at least expectations in the market for a dovish tilt, a more dovish tilt by Powell tomorrow. Okay. Then we got the crude. That was contrary to what the API was showing. API was expected to show a draw as well, but it showed actually a little build. But the crude inventories here, they showed actually a pretty decent draw. Not that it helped oil too much, and I'm going to come back today on having a quick look on oil as well because it is not looking too well for the moment, and perhaps we need a bit of a closer look at what's happening in the oil market as well today. Then we got a pretty decent 20-year bond auction. The market is still continuing to buy US bonds, still continuing to buy the slowdown, the potential cuts, or actually, if you look at the FOMC minutes, the sort of announced cuts. Those minutes really came back on the fact that they discussed a potential cut already in the past meeting, but the whole, well, nearly all of them voted for a standstill, although some now members really spoke about a cut being warranted, but then they all agreed upon the cut being warranted in the upcoming meeting, and so they basically announced as a rate cut in September. Okay, now the size of that rate cut, take away what may happen in Jackson Hole tomorrow, the size of that rate cut is probably going to be determined by the next jobs report, and I'd say more so than the next inflation report, which they all agreed upon that inflation is gradually coming back to lower levels. It is on its way, and we also heard in prior meetings that Powell already said that we don't have to hit the 2% for them to start moving. So now it's really the main focus is on jobs, and the jobs are saying that they are in for a cut. Now the next jobs report, the next FOMC report will probably determine on the size of the cut that we will get in. All right. For the time being, the market is overly pricing again a 25 BP cut, but the 50 BP cut is still somewhere around the zone of 30, somewhere between 30 and 35% chance of a 50 BP's cut, and that will be determined on the next jobs report. Right. Moving over, it's PMI day today. We started off with the Aussie PMI, the manufacturing PMI staying below sub 50. The services are relatively comfortably above the 50 mark. So that is keeping the the rates in Aussie relatively supported. We still see this imbalance virtually everywhere. Not well, actually everywhere apart from the UK. We are seeing this imbalance between manufacturing and services virtually everywhere. So that is something that has been going on for months and months. So I don't think that that would come as a big surprise, but we still see services as well doing relatively well. And also, if you look at the Japanese services PMI, has been doing relatively okay. All right. Japanese are still, though, continuing to buy a lot of foreign bonds. I think they still think that the bonds yields elsewhere are going to get down, and their own yields probably they're buying less of the JGBs in the expectations of the Bank of Japan continuing to hike at some stage, perhaps even this year. And by the way, talking about Japan, we just had a headline out saying that the BOJ may be considering analyzing wage trend in the Tenkan, and that is something that Ueda already mentioned. And of course, we all know that the Bank of Japan is really, really closely watching the wage trends, and a continued wage growth, if that transpires into the Tenkan, which comes out on a much more regular basis than other wage reports, wage negotiations, and perhaps they can have a clearer view there, because the Tenkan makes distinctions between big and smaller companies. They can have a much better judge of what's going on in wages in real time. So they plan to include that in their analyzing of the numbers, and they also said that it may have actually an effect on the monetary policy, and that's pretty important. And why is that very important? Because tomorrow morning in Japan, and that's around 9:30 Tokyo time, Ueda will appear in Parliament, and the expectations are, and of course, seeing especially that Kishida threw in the towel, and we are going to get new leadership in the LDP. So I expect the opposition to really grill Ueda on the moves that have happened after their last hike. Okay. So they hiked 15 BPs effectively. The yen started to strengthen, and then we had other effects, of course, elsewhere as well. But it created a bit of a psycho move, as we all know, in the yen, which interventions helping all of a sudden collapsed to 20 big figures in the space of about a month, and the opposition, of course, straight away picked up on that and is now speaking about chaos and they will probably grill Ueda tomorrow to see what kind of response he has to all of that. So what I think for the day, and I'll show it on the charts as well. What I think of for the day, unless we get like really bad US PMIs coming out, for instance, later on that sends dollar yen back down. If you also look already at what's happening in the yen process, it may be that the market is not worried, but is going to be a bit defensive on the yen today until they know what Ueda has to say tomorrow in Parliament. Because imagine that Ueda says, "Oh yes, we are going to be very cautious because we do not want to create chaos." They do want a smooth transition of the whole monetary policy adjustment. They do want smooth transition. So if Ueda says, "Yo, we may be holding back because we don't want to live this kind of month of July and August again, and the volatility is too high," we may see the yen perhaps being on the defensive into and potentially after also the intervention in Parliament by Ueda tomorrow. So for today and into tomorrow, I'm not saying that I mean the yen is going to weaken, but we can already see the reaction that we had during our morning, that the yen is on the defensive versus quite a few currencies. Okay, so I think we have to be a bit cautious today on yen moves. It could be that we continue to see the yen well, mildly weakening, okay, and being quite volatile, or very volatile, I should say. Over the past weeks, we wouldn't even exclude a move back above 146 at some stage, or stuff like sterling yen, Aussie yen, Kiwi yen picking up a little more steam, just out of precaution ahead of what Ueda may have to say and may have to defend himself against tomorrow in Parliament. Right. Now, over to the Eurozone PMIs. We had a French Olympic revival there, okay? The services PMI especially, and there the imbalance between manufacturing and services really shows quite a lot. Manufacturing PMI slowed more. Factory orders as well were pretty weak, but then the services, of course, saw an Olympic jump, and it's already been reported in by the comments of the PMI watchers here and there that this is an Olympic Games revival. So we need to watch what happens next month, because we could actually for September all of a sudden see a pretty big give back in there. So be a bit careful about what's going to happen on the September data, especially in the services here. And then services as normal. Germany is still the weak, the sputtering engine of Europe. Even the services, it's still above 50, so still in expansion, but we do see a weaker print there as well. Manufacturing still really in a bad shape over in Germany, and we are summertime, so I mean perhaps this continues for another month or two before we may see a bit of a better data in there. But yeah, the services they didn't have the Olympic Games, obviously. So even services coming back a little bit. Also there, factory orders not doing very well. It's Germany is still in shambles, right? Eurozone is a mix of everything, of course. All the countries. I have not really seen. Do they have to come out on another day? That like for instance, Italian or do we already have Italian and Spanish PMIs? For instance, I'm just scrolling back through the week. Because I haven't seen them. But of course, obviously, the Eurozone PMIs are a mix of the whole lot. And then, are we talking about UK exceptionalism now? Well, that's perhaps a big word, but UK is doing markedly better than the Eurozone. Okay, even the manufacturing is in expansion, and the whole report is looking pretty decent. Okay, so we saw a reaction once more. Sterling was already doing pretty well. There are a few people calling for the to be very careful because the new government doesn't have any money. They will be talking about tax hikes soon. But then I was chatting with Gav in our room about it, and the autumn budget is only coming out on the 30th of October. So I mean, for those trying to counter sterling because it may have run far enough, I'd be a bit careful because the sterling is really doing very well still, and even if we can have some setbacks in stuff like the cable, for instance, look at how sterling is behaving in the crosses. It is still doing very well. And if you look at the euro sterling, it is very weak, and that is of course the main barometer because it's the main trading partner, and that's a good barometer for how the sterling is behaving here. And with those numbers, together with those, some say lukewarm or even below expectation, but I wouldn't call them below expectations. The GDP that we saw last week was also half decent. So I would not really stand in the way of this sterling just as yet. Oof, what's next? We've got the traditional Mexican half-month CPI, Mexican peso really, really suffering. We've got the Q2. It's backward looking, but I've got the impression that whatever bad comes out for the Mexican peso these days is accentuated and exaggerated in the market. So watch out for these data coming out. And then we are going to go into the weekly jobless claims. These could somewhere, unless we get a really bad number, come to in between brackets. The rescue is a big word, but help Powell not to have to rewrite his whole speech tomorrow if they come out again within a reasonable zone of expectations. Of course, the market is looking for anything negative dollar that it can use now. So get a number, let's say above 250 here. It may be already enough to weigh on the dollar again. We have the Chicago Fed National Index, normally not a big market mover. But then we are going into the preliminary S&P Global PMIs, all right? We had decent numbers last week. And even though the ISM is more important, again, just ahead of Jackson Hole, any surprise move here, any surprise number here will cause at least a few algo spikes on the dollar this afternoon. Okay, so that is for what's waiting, and we do have some more auctions coming out later in the day. 30 tips, if that goes well again, it's a small one. Those are usually small amounts, so it is a reasonably small one. But the better it goes, the more it actually will weigh on yields and perhaps the dollar as well. Then ahead of Mr. Ueda, we will have the Kiwi retail sales. Kiwi has also been doing really, really well despite a rate cut, although they are still at 5.25%, of course, among the high yielders. So watch those retail sales in Kiwi land, and we will have, just before Ueda speaks, we will have the CPI coming out in Japan. So he'll probably talk about inflation, talk about wages, as we have seen those comments just a few minutes ago. So he will talk about that. And then we, of course, dive into the whole later in the day. All right. There's more central bankers there. Bailey will be over there as well. His vice governor will be there as well, and there's probably other central bankers who we'll hear from. But the main event is 10 a.m. tomorrow morning, New York time, 3 p.m. London time, 2 p.m. GMT. That's where we get to hear from Powell, and that's probably going to be the main event and likely be a dollar mover into the weekend. And that's it for what the news and data to come are that we have to wait for. Okay. Right, euro dollar. Let's look at rates, right? Euro dollar, euro dollar, euro dollar. 112 is the next level. We're turning around those prior highs here. Give and take the few pips that we saw a little blip on the French PMIs, but before the market realized that that was the Olympics month, and then it came back down on the Germans. Let me put it a little bit tighter, and we came back to that a little bit of a retracement here, but we're still turning around the prior high. Okay. Well, I mean, the dollar is still weak. This is still going higher, but I would say that it's going to take a weak US PMI because the euro dollar is slowing down a little bit. If we get a bit of a stronger reading PMI, I wouldn't exclude a retest of the 111 at some stage. And I'm not saying that the euro should come off, but just looking at the data, it's still not my preferred one to express a weak dollar against. I think sterling is still looking much better, and we are getting back to our July 2023 high. Welcome back, sterling. It is also the 127 extension of that July move lower in the cable. So there is going to be a bit of interest. It's not going to need a 2-week US PMI to take it through, in my opinion, because sterling is just doing so well, as I said, on against the crosses. So watch this 131.45. I don't have a lot before 132.75 unless you want to take this one into account here, which is 131.60. But really, I think get a bit of a weaker US number. Looking at how well sterling is doing, this is probably looking a little bit higher still. And really, as I said, get a very strong PMI, and the dollar grabs some of its losses back. I could see perhaps a move back down just into the 130.80. Why not even mid 130s on the cable? But then looking at how sterling is behaving, I think there's going to be a lot of candidates to hoover up cable if we get down into the 130s right now. All right, that's what I think, because it's still looking very strong, and it is looking strong on the euro side of things as well. We are okay. Let me just take you back to a bit of a longer and move. We've broken through the 85.0506, which is 100 DMA. We've broken through the 85.05, which was the 50% of 85.04, 85.05, which is the 50% of the spike we saw from the lows up to those highs here at the start of August. We are below, okay, and now we are testing the next little level here, which is right around where we are, but it is looking quite weak. And we see this divergence between the UK data and the EU data. This thing is still looking quite weak, and get through here. 84.75 may be your next level, but I think your next bigger level is going to be back into that, remember, 84.60 zone. That to me is going to be the bigger zone to watch if we come down there, and it is slipping and sliding. I haven't even put it in our trade room. I'm sorry about that, but I'm just trading scalps short of this again. It's just too heavy. And the divergence, as I said, between the UK and the EU is pretty big right now. All right, let's look at the yen. And so we saw, first of all, we've seen the dollar come under pressure again. And I was noting every time that we saw a bit of Japanese fixing, London fixing, the dollar yen came under pressure and then saw a bit of a bounce. And it happened again in the Japanese time zone. So now we are trading slightly higher on the dollar yen. We're trading slightly higher on the yen crosses, especially sterling yen is doing really well. 144.65 is the 61.8 of the move that we had from the lows back up to the 149.40, which was the 38.2 of the dump lower that we saw in July. So that's a level that the market is seemingly buying at. It's also a bit of a springboard from where we started the move back up to 149. We had like a quick drop below yesterday after those revisions, those jobless revisions. And but it didn't last long, and now we are back here. We are back trading around 145.5, relatively neutral on the dollar yen, I would say. But again, if the market thinks that UEDA may screw back a little bit on the hawkishness, or gets too much of a grilling and says something about they may slow down the hiking cycle a bit, or the reduction in JGB buying a bit, because the amplitude of the moves that they have seen after the prior rate hike, it may be that we get back into levels somewhere around 146 and a half. It's yen, right? It can, and it's volatile. So we can even get back into the 147s if he's really saying something dovish. But the main thing that I'm really showing this now is that be aware that he's speaking tomorrow, and be aware of the moves. And of course, you are aware of those, of the moves that we had on the back of the past job data in the US, because he's probably going to say like, yeah, but hey, hang on a minute. I mean, the US job market is slowing down. So, I mean, it's logic that the yen is strengthening because the interest rate differentials are coming down, okay? So he's probably going to defend, says that, yes, we will try to avoid a chaos. We could see a bit more retracement in the end. All right. So I'm just warning against what may happen today. Another one that we have to talk about is dollar Canada, because we are slipping and sliding below the support area. There's a bit more here around 135, 60, 65, which is the 50% of the 2024 rally. So if people are long dollar CAD, they may choose to hide their stops just below the 135.60 zone if you want to push it. I've just like gone flat. I just want to see what's going on here, really. I would be more than happy to start buying again if we retake 136, somewhere around there. If we retake 136, this move lower may have been just a slow stop washout and a dollar sell-off. It could all just happen, but for the time being, I'm just letting it be for what it is. If we do get weak PMIs, though, we may go for that extra stop run. So be aware of this 135.60 level as well, I would say. And also, and now I'm going to talk about what I told you in the beginning. Looking at oil, it's not at all. The Canadian dollar is not at oil, not at all on the oil bus right now, and it's looking really fragile. We are really turning around this trend line support, triangle support in oil. The Chinese market, the US market slowing down, US exporting a lot. And even with those draws that we saw yesterday on the EIA report, we can't find we can't find a bid for longer than geopolitical spikes. OPEC is really having a tough job to keep oil up. It has to get back above 72 and a half to start a bit of more recovery, which it could do. This could be a bit of a F.A.C.E, and then we get back into the triangle. But look at from when the whole story started, and OPEC and whatever you want, the lows are higher. And again, we printed a higher low up around 80, and it's coming back down. So we could still be trading up and down in the triangle, but it's going to still need a Chinese revival. It's going to need perhaps a stronger global economy to start going up again. But if you look at positives, yeah, assuming that somewhere we get some resolution at some stage about the geopolitical situation in the world, which is probably not yet there, despite the geopolitics, it has not been really supported more than those spikes. So if you get some better geopolitical news, it may even come down more. Okay, I'm really not buying this here, and I'd rather look for already perhaps 74 and a half, 75 to come in off it now. So that the thing I was looking at, and it's very tough to trade the currencies on the back of oil. Okay, if you look at Brent, has come down as well, but the Norwegian kroner has not really followed the whole trade, right? Quick look at the commodities. We are still in break territory, of course, on the Aussie, but it's a while away to get back to 68, the figure, and then if ever over the course of the next couple of days, all right, we are going to go back into this zone, and I reiterate what I said in July. Watch out for this 68 figure a quarter zone, all right? There's a lot going on there. If ever it gets up there on the Aussie, 68 figure a quarter is going to be a very, very, very good zone to monitor, all right? Just wanted to highlight this zone because it's relatively important. Kiwi trying to break the longer term trend line here, and it's all happening around 61 40 50. We are trading on it. We are trading 61 55 57, right where it is right now, right where this trend line comes in, and right where the FIPS are coming in. So it's an important level here, in my opinion. Okay, I know people have watching 62. It is, of course, a triple or so top, or even quadruple top here. But I already would say for the end of the week, watch out where we are in the Kiwi dollar, all right? And then if tricky area, yeah, tricky area in dollar CAD. Anyone having anything else to talk about, guys, before I close for the day? More than happy to take your some questions. Yeah, dollar rand here. It's trying to get back into the triangle. 1794.95 and then 18. Watch those two levels. If we start to creep higher, we could be in for a bit of a sympathy move in sympathy with the mix perhaps. Euro Kiwi, yeah. Euro Kiwi, look where we held. I spoke about it. I don't know where you were with us whether you were with us, Philip, when I spoke about the Euro Kiwi, about the low 180s. It's trying to hold, right? It's trying to hold around here. So keep an eye on what's happening if ever we get back into the 181s, okay, 181 and a half, 181 3/4. If risk doesn't falter, and looking at equity markets, risk is not faltering right now. I'd say we maybe look for levels to perhaps get up here and then come back down. And then I would also argue that European data are not very supportive for much higher euro crosses. Okay, especially against the commodities. I would say if risk falters, if risk comes down, euro commodities will probably go higher. But if we don't get a very big risk off scenario, I would say that we find resistances on rallies in stuff like euro commodities, euro Kiwi, euro Aussie, and things like that. CAD Swiss, Antonio, I'm never looking at CAD Swiss, but the one thing that we can say is that, is that the CAD, although it's a bit on the defensive, is pretty neutral right now. The Swiss franc is still strong, and the Swiss franc is really the expression of whatever can go wrong in risk these days. I'm just going to try and get you a few things on there. Okay. So we had this big spike lower, went back to nearly the 50% of this last move from even March, but we are shying away again. I don't know if you're long or short, but yeah, it's a bit far away perhaps for day traders. But I keep an eye on 63.15 if you're a day trader. Also, if you're a little bit longer term trader and you are in this move, I think the 50% here because we rallied back up to 63.75 and then failed. 63.90. If it goes back up, then we should see it a bit higher. I am not trading this because I don't know, but for the S&P is probably not liking much of these moves, but you can't look besides the fact that Swiss is really the one currency that is trading risk off right now, and looking at equity markets. Um, of course, the Swiss is strong because the interest rate differentials with the Swiss and the US have reduced. They also saw, if I'm not mistaken, a very good retail sales report last week when I was off in Switzerland, so that may help as well. If you're looking at the other side, look at what's happening low 62s, I'd say 62.15 around. If that gets retested and hold, perhaps we can start to range a little bit. But I don't really see anything to do around here in Swiss. Metals, gold is still holding. We're kind of forming a bit of a triangle here. And consolidation triangle, okay? But then looking at how the rest of the dollars behaved yesterday after this jobs revision, I'm actually starting to wonder if it's running a little bit out of puff, really cold. And I'd like to see it start to get back above. Okay, 25. This is a bit tight right now because we are nearly at the apex of the triangle already. But I'd like to see it get back above that 25, 20, 25 zone to really say we are going to go. It's strong, and there's little reason to sell it, okay? But I'm remain cautious, long but cautious, and I did that yesterday on the report, and then let them go this morning a bit between 25.07 and 25.10 because it's just consolidating, it seems right now. But it is a very bullish consolidation still for as long as you stay, if you're a day trader, 2500, 2590, and if you're a little bit longer term trader, for as long as it stays above 24.80, 85, nothing's changed really in the picture. Silver still struggling with the 30 zone, okay? You know what? Get mild PMIs today. Bit of a small setback, but if you get good PMIs, we could see a bit of a setback in sympathy with the rest of the dollars. But remember what I say, silver needs a pretty decent economy to continue to rally. So, and we've also seen like a pretty bullish equities and everything. Like so the market is still not giving up on the Goldilocks scenario, soft landing scenario. So this is going to actually need a little bit better PMIs or less weak PMIs to continue to push through 30. And that's it for me for today, guys. Wishing you successful trading. Watch out for what's going to happen. As I said, UEDA, Jackson Hole, of course, but the PMIs, okay, the PMIs, keep an eye on the PMIs. Have a good day, everybody.